Hi, this is part 3 of The Naked Truth, covering items 3, personal income taxes, and items 4, corporate income taxes. If you have not seen parts 1 and 2, I highly recommend you go review those first so you'll understand where I'm going with these videos. Before I get into tax reform, you have to understand that despite what the occupiers of the past few months think, not all rich folks are corrupt. Please read this article, Among the Wealthiest 1%, Many Variations by Shayla Dewan and Robert Gebeloff in the January 15, 2012 online issue of the New York Times. Google search will take you there. While the 1% has become a catch-all to describe the very wealthy, the members of this group are diverse, especially in where they live, what they believe politically, and just how rich they are. They span the entire political spectrum from the extreme left to the extreme right, and a surprisingly large percentage of them are in the center. In other words, the vast majority of wealthy people, and I am nowhere even close to being in that group, earned their money through hard work, intelligent investing, entrepreneurship, and using legal means to reduce their taxes. More power to them because they are the job creators. However, about 5 to 10% of those 1%ers, that's my estimate, got their fortunes through inheritance or using their money to buy politicians, through fraud, through illegal means of reducing their taxes, lying, cheating, stealing, threats, etc. For an eye-opening account of the housing and market crash of 2008-2009, read The Big Short, Inside a Doomsday Machine by Michael Lewis. Tax cuts will not stop these people. Tax reform, as I outlined below, may stop them. We need complete tax reform, not tax cuts. This will result in reduced taxes for lower income individuals, but also an overall increase in tax revenue. How? To understand how, we need to look at the current tax laws. The current tax code is so complicated that there is very likely no one, not even within the IRS, who knows the entire code. This requires nearly every high-income earner to hire either a tax lawyer, tax accountant, or tax preparation firm. Guess what? Those costs for preparing those tax returns to find all possible legal tax deductions are tax deductible. The American public is subsidizing the tax preparation of the folks who don't need the subsidization. In fact, deductions are the primary reason for income tax inequalities. The majority of tax deductions are beneficial to high-income earners only. There are many reasons for this, but you can bet the primary reason is special interests. Now, before you get all upset about possibly losing your tax deductions, think about this. That is exactly what the proponents for keeping tax deductions want you to feel. A large proportion of low to middle income taxpayers utilize the deductions available to homeowners to reduce their taxes. The same reduction in taxes can be accomplished by reducing the tax rates. They also look forward to receiving a tax refund, money that has always been theirs and which the government has been holding for them without paying interest. Tax reform will minimize the amount the government collects and keeps for you. So, what is wrong with tax deductions? Nothing if every taxpayer has an equal opportunity to use them. But that is not the case. Most deductions can only be used by high-income people. I would say that roughly 90% of the available tax deductions are only usable by about 5 to 10% of the tax-earning population. They get a substantial tax savings, and the rest of us are saddled with covering that tax that is not paid. For example, a high-income taxpayer in the 36% tax bracket donates $100,000 to his, her, or her favorite charity, many times one that he or she has started, and saves $36,000 in taxes. In essence, $36,000 of potential tax dollars has been given to a charity that you may or may not support or approve of, a charity that doesn't pay taxes. Since the so-called Bush tax cuts, and for the year 2012, the following table shows the 6 tax rates. If Congress doesn't extend the tax cuts, then the tax rates for 2013 will be as this table shows. Taxable income here is regularly taxed income minus adjustments, deductions, exemptions, and tax shelters. This does not include Social Security taxes and other payroll taxes, which I may get into at some other time. Other types of income, such as dividends and long-term capital gains, are treated separately also. Currently, personal exemptions are at $3,700, and the same amount for each dependent in the household. When originally set, Congress theorized that the minimum exemption would be that amount required to exist in our economy annually, adjusted for inflation. Really? I wonder if any congressman could survive a month on that amount. The exemption is gradually being phased out for higher incomes. So my theory is this: taxes should be equal across the board, a flat tax. However, a real flat tax would be too high for the lower income folks and way too low for the higher income earners. So I am proposing only 4 tax rates and no deductions except the one I indicate below. All income, whatever the source, is treated the same, no exceptions. Giving income different names such as earned or unearned, capital gains, etc. is just a ploy by the special interest to treat that income at a lower rate. Any deductions that certain groups or individuals want to include in the future should have to show that the deduction will benefit directly more than 80% of the U.S. population. Also, the only tax deduction that I think should be allowed across the board is for health insurance. But even this can be abused by people with the knowledge to do so. So, how we implement this needs to be carefully evaluated. We don't need to force people to buy health insurance or to tax them to get it, such as Obamacare requires. This is an incentive that everyone can take advantage of. I'll present more about health care in item number 8 below. The following tax rates and income brackets are my suggestion only. Once the idea is accepted by you and the general public, then we can have tax experts modify it within reason to meet a needed general revenue for government expenses. Later in item 5, I will suggest a budget that does not exceed tax revenue. The first tax rate is 4% on all income up to and including $16,000. For each dependent other than yourself, wife, husband, or 2 kids, you can reduce that amount by 1%, but not to go less than 1%. This allows for up to 3 $4,000 personal exemptions per family and a minimum tax of 1%. The government would then be required to keep track of all payments for welfare, food stamps, and anything else that goes out to the public from the public coffers, and deduct 4% for income tax purposes. Everyone, even welfare recipients, would be required to file a single-page income tax return to get back up to 3% of that income. People on welfare will then feel that they are part of the system and understand where the money that they received is coming from. The second tax rate is 15% for all income between $16,000 and $100,000. No deductions or exemptions except as indicated above. The third tax rate is 25% on all income between $100,000 and $1 million. Again, absolutely no deductions or exemptions except as indicated above. The final tax rate is 35% for all income over $1 million. Again, absolutely no deductions or exemptions except as indicated above. Below is a table that shows these, and you can compare that with the one above that may go in effect January 1st of 2013. So everyone will pay at least 1% on their first $16,000. Previously, nobody paid tax on their personal exemptions. So, for example, a man making $250,000 per year with a wife and 6 kids did not pay taxes on his first $29,600, based on the current $3,700 deduction per dependent. The reason behind doing this is that I feel it will instill a sense of ownership in the U.S. government, a sort of pride that many low-income citizens who pay no taxes cannot possibly feel. I know this will be controversial, but in fact many people in those income brackets are probably getting some type of government assistance. In the second bracket, taxpayers will be paying up to $15,000 on income between $16,000 and $100,000. In the third bracket, the taxpayers will be paying up to $250,000 on income between $100,000 and $1 million. On any income over $1 million, they will pay 35%. In the past, this bracket has paid as high as 92% after deductions and exemptions. This change should be allowed a minimum of 2 years to take effect. In the past, when tax rates were increased or tax cuts implemented, if there wasn't an immediate result, there was an outcry. Well, folks, it takes time for these changes to work. And after 2 years, we can start looking at adding additional deductions one at a time that will benefit the population as a whole and that every single taxpayer can take advantage of. With this simple tax code, anyone can do their taxes on one sheet of paper and in less than an hour, and will not have to worry about anyone else paying less than their fair share due to deductions not available to themselves. Although I do not have all the information, my very rough calculations show that the federal government will collect more taxes, as much as 10 to 15% more. Most of that will come from higher income folks, many of whom currently pay little or no income tax due to tax shelters and deductions. So what is the downside? A lot of people in the IRS will lose their jobs. The best I could find was there were 106,000 employees in 2009. Since almost all filings could be digital, I suspect that about half of them will lose their jobs. A substantial cut in government spending. Tax accountants, tax lawyers, and tax preparation software companies will also take a hit. Tax courts will not have as many cases, and judges can spend more time judging other crimes. You can count on almost all these groups opposing the above suggested tax reforms. Another group that will oppose these changes are churches, charities, and tax-exempt organizations, mostly 501c groups, who rely on tax-deductible donations to survive. Since there is, supposedly, a separation of church and state, any deductible contributions to a specific church is, in essence, a contribution by all taxpayers to that church. There are thousands of organizations who claim status as a church. If the members of those churches really believe in their church, they will continue to support it. I do not think there will be a substantial reduction in contributions to legitimate, worthwhile organizations. I believe the American people are good, moral, generous, and many are or claim to be altruistic and will continue to support the charities and other 501c organizations that deserve to be supported. It will weed out the charlatan type of organizations that are self-serving and do not contribute to society. This is the end of Part 3, Personal Income Taxes. Part 4, Corporate Income Taxes follows. Thank you for listening. If this was interesting at all to you, please pass it on to your friends. Have a great day.